Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
Welcome back to another episode of the Tech Behind FinTech. I'm your host, Nnamdi Osuagwu. Joining me is a repeat guest. I'm happy to have her, Hoda Mehr from Stock Card. How are you doing today, Hoda?
I'm doing very well. It's good to be back.
It's always a pleasure having you. I'm looking forward to our conversation. Today we'll be discussing the ripple effect of U.S. shutdowns on FinTech. So, the reason I wanted to do this show today, over time, the last few months, you've been hearing about U.S. shutdowns. Some people ignore it. Some people are into it. But I wanted to really break it down so we could get an understanding from it. And more importantly, how does it impact FinTech? Hoda is an expert in all things economy, finance. I always want to bring her on when these business topics arise so we can really break it down, ask questions, go back and forth, and really help our audience understand it. So housekeeping first. We are streaming live from Facebook, LinkedIn, YouTube, Twitch. We also have a stream going from Instagram. If you have a comment, please, we welcome it. Comment, questions, even if you're an expert in this stuff, drop it in. If you're on Facebook, LinkedIn, YouTube, and Twitch, we'll post it on the in the video, so you'll see it moving forward. If you're on Instagram, you can go to the techbehindfintech.com. It's pinned. And you can post your comments there. Look, we have the show going. You can click on one of the links to YouTube and so forth. So with that said, I would like to jump into the show. Even though she's a returning guest, I still have to read her bio so those who are not familiar can get introduced. Hoda Mehr is founder and CEO of Stock Card. Hoda has lived and worked in several countries and cultures, including the Middle East, Canada, and the U.S. She is an economist and has an MBA from the John Molson School of Business. Before starting Stock Card, Hoda worked on bringing to market several multi-million software products. She then turned her side passion for investing and launched Stock Card to solve the problems she discovered while running a 30,000-member private community of stock market investors on Facebook. Hoda lives in Southern California with her husband and puppy, Rottweiler. On social media, Hoda talks about the future of retail investing, the pursuit of 100-bagger investments, and her journey building Stock Card. Hoda, welcome back.
Thank you. I appreciate
that. Every time I read your bio, I see the puppy Rottweiler. It's not a puppy. The thing is a massive pet.
I know.
But I just always have to say that because it always says puppy. That the dog is not a little. You think it's a little puppy? No, it's a very massive dog.
Yeah. Well, on a personal note, I actually should have told you, which is a sad thing. We lost him actually to cancer. So yeah, but I have to update you and tell you about that. But we're still mourning for him. But yeah, he's gone now, and yeah, we're absolutely missing him. But yeah, unfortunately, that's starting the show with sad news. But I guess that's how life stuff are, right? You update on people in your life.
Yeah. I'm sorry to hear that. So I need to make a note of that moving forward when I read your bio.
Thank you so much. No, I appreciate that.
No worries. Okay, so jumping into this topic of U.S. shutdown. So let's start, right? Recent news update. So the U.S. Senate took the risk of an impending partial government shutdown off the table on Wednesday, November 15th, as it passed the stopgap spending bill and sent it to the President Joe Biden to sign into law before the weekend deadline. So let's take a step back. On the news, you've been hearing about that. What is a U.S. shutdown? Let's just get simple for a second.
Yeah. That's a good question. And actually, it's very interesting because we hear so much about shutdowns and it sounds horrific and terrible, and it's very scary, and especially outside US or people from other countries, they always, when they hear US shutdown, we think, oh my God, how could the world's biggest economy and this power of them, like power and symbol of democracy, can allow the government to go shut down through the shutdown. But if you step back, as you said, and kind of think about what's happening in terms of the definition, is that government of US has two types of spending. There is the essential spending, and then there's non-essential, or what they call discretionary spending. So 2/3 of the government's budget, it's essential budget, and it will never get shut down. It's never, that 2/3 is never the topic of discussion for the shutdown. So when we hear government shutdown, and then when the Congress doesn't come to a conclusion on the budget spending, it's only a conversation about 1/3 of the budget. And then it's basically there are 12 topics in this 1/3 of the budget that the Congress discuss, and the two sides of the aisle try to agree on where to spend that 1/3 of the budget. If they cannot agree on how to spend it, it could be that they don't agree on all of these 12, which is this case right now. This time around, there's none of those 12 topics are being agreed on. Sometimes it could be partial shutdown, meaning that out of the 12, maybe 5 are discussed or 2 are discussed, or different variation. So that's the government shutdown. It's the disagreement of the government, Congress, around how to spend the discretionary budget of the United States government around that 1/3 part of the spending.
Thanks for that. What are some examples of the 2/3 of the essential spending?
Yeah, so a lot of things related to military, so protecting the country, it's in that 2/3. A lot of things like payment of Social Security, main foundations that keep the government running are in that basically 2/3. So the country would never be at risk per se, because it's protected by that 2/3. And we've now, in the past 4 decades, we've gone through 10 shutdowns. And over the course of these 4 decades and 10 shutdowns, the government has gone better at identifying what are the things that are going to risk the country's stability or functioning stability of the government. And they've been finding ways to fund them or appropriate budgets to it in different ways through that 2/3. So, for example, one of the government shutdowns in the past resulted in delay in tax refunds. Now that's being appropriated by a different budget. So it's not ever part of that topic of discussion, right? Actually, it's good to stop and say that whenever the government shutdown happens, each federal agency has to work with the Office of Budget and Management of the Budget to identify the guidelines of what they deem a non-essential that can be impacted by the shutdown. So it's never clear cut. It always changes, and the government learns from the previous shutdowns around eliminating bigger and bigger risks to I guess the stability of the country and government and essential functions of the government.
That's interesting. So it's the meeting, I guess, like you said, the Office of Budgetary Spending or something to that nature, meeting with each of these federal agencies to really start. So during that meeting, that's when they start to make the decision on discretionary, I would assume.
Yeah, well, it's a process. It's the guidelines of identifying what can be deemed unessential versus essential. And actually it's not, and we don't want to downgrade, because it's still 1/3 of the government's budget. It's a massive amount of money. And we don't want to downgrade and say, oh, I mean, we're not going to spend 1/3 of our budget. It's no big deal. It is a big deal. But it's just, I wanted to emphasize that it's not the entire US government that goes shut down. And a lot of functions now are basically being taken care of from other, or appropriated budget to from other sources. But still, there are, in that 1/3, there are lots of things. For example, military will continue to operate, but military may not be able to continue recruiting new recruits, new civilian recruits. So that's, if it takes 1 day, it's probably maybe okay. But if it takes 14 days, is probably not okay. Or like the longest government shutdown in the history has been about 35 days. So 35 days of military not being able to recruit people or doing that activity, that's the major backlog. Like there are lots of things that get impacted. They're not just as scary and as essential as a lot of times the media and the conversations in the media appear it to be.
No, I find that fascinating. I mean, in researching the show, I personally have not. I've been always a private sector in terms of my in working. I know I have a lot of friends that are in the public sector that are contractors and different things of that nature. So in preparing for this show topic, I want to talk about fiscal year, because then it was like the fiscal year, it stops September 30th, right? And it goes from October 1st to September 30th the following. And what I learned is that the reason it doesn't follow the calendar year, because in that time period is the preparation time to prepare for the following year. So in this case today, 2023, right? That temporary stopgap bill was passed November 15th. So that's like a month and a half into the fiscal year. You mentioned the longest was 35 days. So how does that work? Is it 35 days from the start of the fiscal year, which is October 1st, or
at the end of the deadline? Yeah, 35 days at the end of the deadline. So now, as of if the president signed this stopgap into law, they will have 45 days, which means the agencies can continue spending as per last year's appropriated budget. So there won't be no new budget allocations or no extra money coming in. It's basically continue as per what was approved before. And then they give themselves the 45 days to hash things out. And if by the end of 45 days, they won't be able to do that, if by end of 45 days, they don't agree to come to a conclusion, the budget will stop. So all the agencies who are deemed honest and non-essential, they have to stop paying and spending money. So it's by the deadline.
Okay, so I think the deadline in this case is January 19th, 2024.
Right.
Okay, that's definitely that's interesting. All right. So now we have an idea of the government shutdown, of what it is. We understand now in terms of the fiscal year when it starts. We understand the current situation. A stopgap was approved up until January 2024. Now the question is, how does that now impact the private sector? I think sometimes when you're in the private sector, I know, like I said, from the friends in the government side that work with the agencies, they're constantly aware of this, because it obviously could impact them if they're deemed non-essential in that 1/3 bucket. How does it start impacting those in the private sector with markets and so forth?
Yeah. So there are basically two broad impact on the private sector, especially startups and fintech stuff. We want to specifically talk about that. There is the short-term immediate impact in the whatever number of days or hours. It could be because the shutdown could be just hours or could be days. In that whatever number of hours or days that the government is shut down, there's immediate impact for some companies, which we will discuss, around their revenue, around their fundraising, around registration requirements with government agencies and things like that. We'll talk about that. And then there's the long-term impact that to me, maybe the long-term impact is a little bit more important, which is around United States brand globally, right? And just representing who we are as a country. So maybe we want to talk about these two topics separately. First, the short-term impact and then the long-term impact. On the short-term stuff, so there are, depending on not every company obviously get impacted, but some companies, to your point, who are contractors to the government, if the projects and activities that they're working on are deemed non-essential, they will not get paid. Most likely, they will not get paid for the period of shutdown. So if you are a government employee, you don't get paid, and your non-essential projects, you may not get paid during the shutdown, but in the last 10 times that the shutdown has happened, government basically paid back people for days that the government was shut down. So there's a gap in salary if you're an employee. But if you're a startup or if you're a company that work with the government on a contract basis, chances are that you're not going to get paid back for that period that the government is shut down. So there's a gap in revenue. There's a revenue loss basically for contractors. And we know tons of contractors, lots of startups do contract work with governments. Maybe not necessarily in fintech, but in a lot, like you see a lot of consulting services, you see a lot of military type of stuff. So that's immediate revenue potential. The other one is on the revenue. I'm still talking about revenue stuff, revenue impact. If you are a company that securitize things, so if you're SoFi, for example, what does SoFi do? SoFi initiate loans for its customers and then package these loans, securitize these packages, and sell them to other financial institutions. So that securitization process needs a registration, needs to be registered by the SEC and by other government agencies. And in a lot of cases, those registrations deem as not unnecessary. So if you are in business of securitizing anything during the government shutdown, you won't be able to securitize your product. So that would be an immediate impact on revenue for a company that does that. Those are some examples, and it's very critical. It's very applicable to fintech because that's a lot of fintech space, right? A lot of loan securitization on other asset securitization that happens in fintech that will be shut down and impacted from a revenue point of view during shutdown.
Can you help me out? What's the term SoFi? What does that stand for?
Oh, SoFi is a company, right? Like a fintech company. So if you're a SoFi or any other company that securitize loans that are initiated to end customers, you'll be impacted.
I thought it was an acronym, so I was like thinking like acronyms of stuff. Like I was thinking financial instrument. What is the SOs in my head? That's what I was going with. It's an actual company. Okay, I totally understand. So let's understand that, right? Let's circle back to that short term. There's a couple of things you mentioned that I want to address. So first, government employee, you're as an employee, right? The money's there for you. Once it's a gap, you're going to get compensated back for that gap. It is about hopefully you have enough to pay your bills during that gap. Contractor now, totally different because contractors, you basically get paid for what the hours that you work and you bill accordingly. You will not get that back. So that's a huge revenue loss, especially if you're a startup that's working with the government, whether you're in the fintech space or in another space where you have contract work with the government in some capacity. So that's number one. Number two, you also mentioned now the financial instruments in terms of anything that requires government input in that regulatory body. Mm-hmm. That'll be a gap. You're not going to get the necessary responses that you need to facilitate your transactions. Is that accurate?
Yeah. So you won't be able to. Yeah, exactly. Let's say you've issued lots of loans to customers. So basically, a lot of fintech companies who are in the business of lending or peer-to-peer lending, for example, or just general lending, they don't hold those loans on their balance sheet. So if I come to you and then you initiate a loan for me as a fintech company, you have the option of keeping that loan on your balance sheet and liability on your balance sheet and just deal with me. But a lot of these fintech companies don't do that. They take my loan and this guy and Sally and Johnny and Jenny's loan, they package it all together. And then they sell it to secondary financial institution and say, this is not your problem. You deal with these guys, right? And it could be a mortgage, it could be a loan, it could be car loan, it could be any kind of personal loan, student loan, it could be any of those kind of loans. So in that case, when you're packaging mine and Sally and Johnny and Jenny's loan all together, that process, packaging it together, it's called securitization because you're creating a new product, new financial product. So you have to register that loan package with the SEC and other government agencies before you be able to sell that to other financial institutions. So that process needs government agencies' involvement and approval. And if the government shut down, most likely these kind of registrations are part of on non-essential immediate
That's a
activity.
great point, because I remember back, like, an example so people could relate, back in '08, one of the biggest things was like mortgage-backed securities. So packaging tons of just bad mortgage products, which
Yeah.
eventually caused the collapse. But,
Yeah.
that's an example of what you're saying. So those MBS, the mortgage-backed, they have to be securitized after it was aggregated and everything. That required some sort of government entity to go back to help with that securitization for regulatory purposes and so forth. So that works. So the ripple effect on that is what now?
Well, that's one of the impacts. So we've been only so far talking about the revenue impact, and the ripple impact of it depends on the number of days or hours, right? If it's only a couple of hours, probably it's manageable. Even a couple of days. Generally speaking, the impact is not going to be as big, right? Because as we said, the longest ever government shutdown has been 35 days, which is a significant amount of days for not having revenue. So if a fintech company is relying on that sort of revenue, needs to maybe get line of credit or rely on some other source of funding to kind of fund that process. But the ripple impact is you may lose your revenue generation will get delayed by whatever number of days that you're waiting. And then the thing is, once the government is back up, there's probably a backlog of all these requests. So it's not only the shutdown process, but it's backlog, government catching up with the backlog of all these sort of registrations on the revenue side.
Okay, I got it. Now when we start to kind of shift gears into the long term, you mentioned something early on in the show in which foreign sentiment on U.S. government shutdown, like the thoughts about that, because it sounds pretty scary, right? Especially if you're not in this country, but you're looking at this country for different purposes, business purposes, immigration purposes, and so forth. You hear this, oh, the U.S. is shutting down. They might not understand the intricacies and the different aspects as to what you're explaining.
Yeah.
Sentiment.
Yeah. So we should also come back later on in the show on the short-term impact, because there are other short-term impacts beyond revenue that we can talk about. But I want to answer your question because it's very interesting. So I became a U.S. citizen only a couple of years ago, and then I was a Canadian and also an Iranian before that. I'm still all three. But for me, coming outside to the U.S., I've never experienced government shutdown in the U.S., right? So when I first ever I heard of government shutdown, I was like, what is going on? Why the government shutdown? And that's because no other country, based on my research, no other country in the world allows its government to go through shutdown when the legislative body and executive body do not agree on the budget. And no European country and no democracy out there ever allows the disagreement between the government results into the government not operating and going to this kind of like shutdown. I found examples. For example, Belgium had a period of time of 589 days without a government, but the government operated. Government continued to operate it. No budget stopped. Nobody got backlog of revenue. All the registrations went through as if there is a government, but there was no actual elected government for 589 days. And that's because the structural design of the governments in most of the other countries is just different. They don't allow the shutdown to happen. And only government shutdown can happen in the rest of the world if there is a revolution or if there's a coup or there's a natural disaster, or even if there is war, governments continue to operate. So that's why from outside in, and even from many people inside America, when you hear shutdown, you immediately have this horrific reaction. It's like, why is possible? How is the government going to shut down? But in reality, this is a very unique case to the United States government. And we actually never had this until 1980. So in 1980, the Attorney General under President Carter created this situation, meaning that interpreted the regulations that we have around budgeting around this strict interpretation of the law that if there is no agreement, there is no spending. Before 1980, the year 1980, and this work by Attorney General at the time, if the government didn't agree, even in the US, if we didn't agree on the budget, like any other country in the world, we would continue spending. So we never shut down. It's only after 1980 that the shutdowns have started, and we've seen immediately in 1981 there was the first real shutdown happen, and then since then, in the last 4 decades, we've had 10. So I wanted to give you that context because anybody from outside or anybody who doesn't know these intricacies related to government, United States government design, would look at it and say, it's just make no sense. The government cannot operate. But people don't necessarily dig into the difference in the context and how the governments are designed in the US and elsewhere. So that's an interesting context we have to consider. And then we can move into the image and long-term impact of the shutdown.
Let's take a moment, right? This is all news to me. So, and this is why I guess we're doing the show, right? To answer these questions. So, 1980 is when the concept of the government shutdown started. So prior to that, if there was no agreement, they'll just keep spending. But
until they reach the agreement. Yeah.
But then how long does it take, or when is that? What if the agreement is just not reached? Like how does that process work prior to 1980?
Yeah. Well, so it's basically, so in other countries in the world, if the parliament, and it happened, for example, in Canada as an example, if the parliament cannot agree on the budget that is presented by the ruling executive body, it will trigger a re-election. So it's not that, oh, we can fight it together and figure it out. If there's periods of time that they hash it out and figure it out, blah, blah, blah. And if it becomes so serious that they cannot agree on, it results into a triggering an election. It happened during Harper administration in Canada. When Harper was prime minister, they couldn't just agree on the budget. And then, there's periods of time, depending on which country you're at. And if you can't agree, it results into a re-election, right? And then in the United States, we've always had that the different parts of the government have to have the checks and balances, and no ruling party can just like go ahead and do whatever they want to do, which is quite unique to the United States, this system of checks and balances. But until 1980, they would just give themselves government continuous spending as per whatever approved, but they would continue agreeing on some sort of a budget, right? But they wouldn't shut it down. After 1980, the interpretation of the law that exists was no budget, no spending. So that's basically how the system changed. It became more stricter, allowing government to agree. I think the goal at the time was like try to get to agreement as fast as possible, which sort of like backfires into now it's becoming a bargaining chip between the two parties to kind of like hash things out. So yeah, that's just a structural design differences in the US.
That's fascinating. So in the last 4 decades, 10 shutdowns. So it's like a fourth of the time we've been shut down.
Yeah.
Interesting.
Yeah, but and also they're not all as like the last one that we had, which lasted 35 days. That's a big one, but of some of these 10 shutdowns were only for a couple of hours, right? So it's not all this massive kind of multi-day impact on people in terms of salary and everything else that we're talking about. But it went into a couple of hours of shutdown or a day or so. But yeah, we've had 35 days of it too.
Thanks for the explanation. It's like I'm like so fascinated. I feel like it's one of those situations where, like I said, personally, I've been in the private sector all my entire career, and the fintechs I was involved. Well, maybe I was just not. I was a little bit not in that particular line of business when I was at larger firms, but obviously, for all the different large investment banks in the past, they've had people, I guess, that they're dealing with that on the back end. That wasn't the part of the business in tech that I was supporting, so I wasn't really impacted. Still, fascinating stuff. I'm really fascinated. So we kind of cut the short-term impact? Is certain things that you want to discuss around that?
Yeah, and we should also talk about a few other short-term things, and then we talk about that long-term image force or impact right after. So we talked about the revenue impact, which we talked about securitization and contracting. But for example, any other, it's sort of along the line of registration. So any sort of public fundraising that you want to do, if it's an IPO, if it is crowdfunding through Regulation A+, any sort of fundraising that requires registration with the SEC will be delayed, will be on hold, because SEC would not process any registration for, it's deemed unnecessary, right? It's not going to be impacting the future of the country. So if you want to IPO, if you're a big company, you want to IPO, you might have to wait until the shutdown is over. If you want to do crowdfunding, because for example, our company did crowdfunding last year, 2 years ago, and you are registered with the SEC for the crowdfunding process. So any sort of that kind of registration is not going to happen. The other one is, for example, there are innovative fintech companies out there that IPO different kinds of assets. I found this company that basically take any luxury product or rare product, like a very high-end luxury, a car or a house, a childhood house of a famous celebrity or a sports figure or something like that, and take those assets, and then they allow people to invest in those assets. But the process of making those assets available for investing, it's basically a mini IPO. It's similar to IPO. It has to be registered as an asset. So if you are in those sort of alternative asset space as a fintech company, and it is part of your day-to-day operation to register your assets becoming available for investment, you're not going to be able to do that, any of that during the shutdown. So anything, basically, as a rule of thumb, it's not as clear-cut because we talked about there would be guidelines depending on the shutdown, but most of these sort of government-related registration regarding investing and fundraising will not be possible during the shutdown.
Questions on that? So any type of, this was huge. Well, not huge, but this was like a whole business model, especially in the blockchain world, where DeFi, where they're securitizing assets, as you say. There's certain rare items, and let's securitize that. All of that, when you start going on that, and if that's one of the services that you provide, it has to be some government interaction. You're just not securitizing that in isolation. So let's say that it could be, rare items, as you mentioned, and you say, you know what, I'm going to give people the opportunity to own small pieces or a small percentage of this. So in essence, right, when you do that for investment purposes, you are securitizing that asset. Even the value is not as relevant as the concept of breaking it into small pieces and giving essential people that are investors, shareholders, whatever you want to name them.
Yeah.
Even if I do that on an isolated blockchain platform or even on my platform, I still have to interact with a government entity to get that done.
Well, I mean, then we get to a totally different conversation around what's securitization and whether if you're on blockchain, are you security or not, which I guess it's a topic of different conversation. But if you want to follow securities laws, that whatever that is being securitized for the purpose of whatever that is being offered to public with the purpose of sharing profit or generating return, it's a security, therefore needs to be registered as a security. If you follow that logic, and if you want to go through that registration process, you have to securitize it with the SEC and other government regulatory bodies. I mean, obviously, there are tons of ICOs and IEOs and things like that happened that haven't gone through that process, and they just did it. But that's, as you know, it's a totally different topic of conversation. But if you follow the rule that if it is for the purpose of investing, and it's there's a four criteria. Purpose of investing is for sharing profit, blah blah blah, things like that. It is a security and it has to be securitized. in that context, if the government is shut down, you won't be able to go through the process.
I know, great point. So let's shift it back to crowdfunding, and let's shift it back to IPO, and let's shift it back to investing as a VC in companies. Those three buckets, right? So for the crowdfunding aspect, right? There's a lot of crowdfunding platforms right now that you join, you have an idea, various people can invest in you. If you're isolated in that platform, would that still apply?
Yeah, because when you're crowdfunding, you're basically doing some sort of IPO, right? It's just not it's not just traded on stock exchanges, but you're making partial ownership in your company available to general public in exchange for partial ownership in the profits and return and valuation of the company in the future. And that's basically it, right? That's basically the same as an IPO. That process required SEC registration, and you have to follow. You have to report. You have to get a lawyer. The lawyer has to review. You have to get your financial statements get audited, get reviewed by a certified accountant, and that kind of process. Just the same as the mini IPO. So it is a legal securitization of ownership of your company, and it has to be registered. I'm not talking about Kickstarter, which is people are raising money for doing a project and there's no ownership implications for Kickstarter or GoFundMe type of projects. But if you are doing crowdfunding following Regulation A, Reg A or Reg A Plus, you're basically securitizing and you're registering with the SEC and you require. So if you're on Republic or there's a few other ones, Seed Engine, bunch of other, these are all sort of like crowdfunding platforms, you have to register with the SEC.
Yeah, great point, right? So I get that. I get also the IPO aspect, because then, you are actually creating the actual, security that's going to be on the market and so forth.
Yeah.
What about the VC standpoint? I'm investing in a company. They did their rounds. I like what they're talking about. I want to throw them, some seed money or some Series A money. How would that process work?
I don't specifically have done enough research on the VC side, because a lot of the VC sides are basically accredited investors, so it's not general public, and the rules related to accredited investor and general public is very different, and regulatory requirements and registration requirements for VCs are different. If you're like a PE VC, like private equity VCs, different rules. If you're rather than like another sort of VC, basically, the short answer is I don't know the intricacies of there, but I know there is difference between when you're dealing with accredited investors and non-accredited investors, and SEC registration and involvement is quite different in those two scenarios.
Fascinating. Exactly. I mean, and this is why I wanted to discuss this topic, because I have never really dived into a conversation in regards to it. It was like something we've been just hearing about for the last month in the different news side. So this is right on time, and it's really helping me get a better clarity on it. All right. So do we have additional short terms before we
perhaps, yeah, maybe one or two more additional short terms. This again related to registration, but like if you are a fintech company and you are a brokerage, you want to become a brokerage dealer. So if you want to create another Robinhood or something similar to that, again, it goes back to registration. So you have to be registered as a broker dealer with FINRA and SEC. And other government bodies, depending on wherever you're operating. So any sort of basic registrations and approval requirements are impacted. And then the other thing I would say in terms of short-term impact is policy development, which is very relevant to innovative sectors of fintech. For example, cryptocurrency, cybersecurity, things related to anti-money laundering stuff, technology. So these startups do a lot of collaboration with governments. They send them technical information or reviews of the market for the government body to be able to review and understand, and then develop policy that help facilitate this industry. So most of the policy development committees will be shut down during the government shutdown. So it's not that, obviously you're not creating policy for next 1 month, right? You're creating policy, and the policy development is multi-year efforts, but it's just to say that that period of time that the government shut down, none of those things happen. So it basically delays speed of innovation in the country because the collaboration between startups and government will basically shut down around policy development.
Fascinating. Okay, I think I get it. I think so. When you start looking at the shutdown, anything around securitization, anything around having to work with the different government entities in regards to regulations, like you just said, policy development, securitization is a big one. Anything that has to really do with the aggregations of loans, another aspect of securitization, depending on the idea. Obviously, if you're a broker dealer, whether it's in the case of Robinhood, as you mentioned, even looking at, I would assume even a Coinbase for that because they deal a lot with the government.
Of course, yeah, and Coinbase does a lot of policy development collaboration too, as well, and a lot of cryptocurrency companies are doing. Yeah, so yeah, I mean, if you want to recap it, anything related to contracting work with government, immediate revenue generation, anything related to securitization, whether it's being loan securitization or IPOs or crowdfunding, anything related to registration, approval required from regulatory bodies, and anything around collaboration with the government will basically get impacted by the shutdown. I have to say that none of these things are clear cut, as we talked about. These things are following guidelines, and it's never that there's like a set of rules that are or set of checklists that are written down and say this thing is always honest, non-essential. It can change. So all of these things we talk about can change depending on the shutdown and guidelines. But generally speaking, registering or securitization or IPO, it's not impacting the government, and it's not impacting the safety of the country and things like that. So they can be delayed if you think about it from a logical point of view. And they tend to become part of that non-essential activities.
Interesting. All right, cool. I think that's great. I have a better clarity on that because, 100% better clarity on that. Thank you for that.
Yeah.
More around, next question I have for you is more around your wheelhouse and around investing. What's investor sentiment looking like when that happens?
Yeah, so for the most part, the stock market has ignored government shutdowns in the past. In the past 10 times, we have had periods that the government, so it's like if you look at the data in the past 10 times, there had been, or even building up to a shutdown or after the shutdown, there hasn't been any a pattern of saying that the stock market go down or up or react in a specific way. There has been times that the shutdown happened or building up to it and the stock market went up, and there are periods that the stock market went down. And the reason behind that is that because the most of the investors understand that these are first political movements. Secondly, the impacts are pretty short term. Even if 35 days the IPO is delayed, it is annoying and it's extra work and extra cost, but it's not going to impact on the valuation of a company per se, which is what the stock market is all about. So there has, in most cases, stock market has basically just ignored it and never really paid attention to it specifically, especially because there's so many other things in the stock market happening these days, in most cases, that are important and more impactful on the valuation of the companies, and that the government shutdown basically takes a backstage. But I guess it's important to talk about that long-term thing that we wanted to talk about, which is the image of the country, because of what we talked about. A lot of other countries don't understand the intricacies of government structure in the United States and difference between their country and them. So from outside, they look at it and then they question the stability of the government. And so that basically the brand image, as they say, is everything. How people perceive you. Leadership is in the eye of the audience, right? The audience. So when people need to believe that you are a leader, and then that you become a leader per se. So if the global citizens start questioning if US can get a hold of its own governing structure, that's really bad for the image of the country. And we've seen even rating agencies, so Moody's or the Fitch ratings, have downgraded U.S. credit, U.S. debt in the past, and they cited or they mentioned government shutdowns as a sign that the government cannot put its act together or kind of like govern itself well, which is very interesting because you should basically counter argue with them and say, hey, this is because of the structural design of the government. There's like, we don't want to get to the political aspect of that conversation, but you see the ripple effect of shutdown on United States image and credit worthiness. And both credit agencies who downgraded U.S. debt have mentioned the government shutdown as one of the reasons and the sign of governing problems. And to me, that's more important in the long run, because that basically erode the image of the United States as the power in the global economy. And it may not have an immediate impact on the stock market or fintechs and things like that, but it's the reputation gets chipped little by little every year and every shutdown, and then who knows what's going to be the ripple effect of that in the long run.
Let's hop more into that topic. Let's take a moment for our sponsors, and then we'll be right back in a minute.
Are you an emerging fintech with a limited budget seeking more sales and partners? Introducing Strategic Generation, your partner in leveraging cybersecurity for sales and partner enablement. Fintechs often lose opportunities due to unsophisticated cybersecurity programs. That's where we come in. Strategic Generation assists with due diligence, security posture visibility, penetration testing, and on-demand virtual CISO services. We connect your systems to our partnered platform, and voila! Instant access to real-time diagnostics and compliance frameworks such as SOC 2 and PCI DSS. Gain the confidence of prospects and partners. Strengthen your cybersecurity program and drive success. Stop losing deals due to cybersecurity. Visit strategicgeneration.com and click on On-Demand CISO to connect with an expert.
We are back. No, it's interesting what you said in terms of the long-term effect and the branding of it. Especially, I mean, you probably have the dates on that, but I remember when Moody's did downgrade the U.S. When was that? You remember?
That was a couple of years ago. So the most recent one was Fitch. So Fitch ratings, this is one of the smaller one, but it's still one of the biggest in terms of global market share. So Fitch ratings downgraded United States debt and creditworthiness this year. Moody's have done it a couple of years ago, but in the wake of, so it's the ratings, if you think about it, the process is not that they're going to just like come out one day and say downgraded, right? So they issue warnings before several times, and they issue the statement and say, oh, we see these signs that if the government, if you don't fix it, there will be a downgrade down the road. And this year, not Moody's, yes, Moody's basically, but other financial rating agencies have issued those warnings. So they haven't really downgraded again beyond what happened for Fitch rating this year, but they issue warnings and say, we're putting your country, or whatever the asset they're looking at, we're putting it on their radar and under the watch, and we want to make sure you can fix it. So this year we got a downgrade from Fitch, and we got warnings or putting on the watch by other rating agencies.
Out of curiosity, it's downgraded, right, from a rating agency. What's the impact on whether it's fintechs, the NU, like investors? Like, what's the impact exactly?
Well, the real impact is the cost of borrowing goes up. So the rating agency basically say how reliable this, if you're borrowing money from this country or this company or whatever the assets are just talking about, if you borrow money, how likely it is that you would get back your money right on time. And as the credit rating goes down, you're basically taking more risk because your money may not be able to return back. and those who are lending money to that entity will require a higher yield because they're basically taking more risk. So the cost of borrowing goes up as your rating goes down. That's why a company that is really close to bankruptcy or has lots of debt, if they want to refinance their debt, it's sort of like you've probably heard of junk bonds, high yield junk bonds. It's because it's very risky, so they have to pay really high interest rate in order for investors to be willing to give you money. Same goes with the countries. As your credit rating goes down, you have to pay more to convince investors to give you money, lend you money. Obviously, the rating for the United States is not that we're terrible. So we were like A+, and then we're like a AA- now, right? So it's not that we're downgraded to B or B- or something like that. It's just from the highest category, we're now down one category. We're still like AA, but it is not the best. For years, the United States been the most secure, the best rated possible way of money, basically lending money.
So I know we're almost at time, but just to pull on this thread, right? Because here's where I'm going. Here's how my mind is working based on this entire episode and different things that you said, right? U.S. shutdown, rating agency may not be the primary factor in terms of the downgrade, but it is one of the contributing factors. Am I correct with that assumption? Okay,
yes.
Cool. We now get downgraded from an A+ to A-, similar to like to keep it for the average person, right? You're trying to buy a house, a car, you have bad credit, somewhere around, 600 below, it's going to be very expensive for you to purchase that car. The interest rate is going to be ridiculous, even if they do lend you. And then let's say someone does lend it to you, interest rates are crazy. Now, on the US side, similar concept, but from a government borrowing, how does that trickle down and impact businesses, people, and so forth?
Well, there's no immediate impact on businesses and people, but basically if the government has to pay more, the government has to spend more, has to borrow more, those kind of impact, like those sort of macro level trickle down. But also all the technology companies, for example, Palantir CEO was having a conversation around if the United States creditworthiness is down or image of the government down, rest of the world would have less interest to let's say work with technology companies that are under protection of the government in the US versus government in China. So obviously these are not like immediate big jumps, and the whole conversation, even downgrade from like A+ to AA, which is what happened with, let's say, this year downgrade, they're not there. Like we're not there in terms of saying, oh, suddenly people don't want to work with American companies, but it's basically a step-by-step getting there, right? So if we continue on these like shutdowns and eroding on our image in the next like 5 years, 10 years down the road, suddenly we're going to be a totally different brand in global scene compared to, let's say, China or European countries, basically.
Interesting stuff. We're closing. Before we, before to close, I'm going to give you the platform to talk about stock card and so forth. But before we get there, any final thoughts or any messages you want to leave with the audience regarding this topic?
Yeah, we basically sort of goes aligned with a stock card. So the whole philosophy behind a stock card is that everybody needs to do their own research and understand the context behind their research and what they're investing in, and ignoring financial media or media, because media is designed in most cases to get you emotionally react and click and read more, that's their business model. So if you want to be a good investor, you have to be careful and give yourself a pause and don't just listen to what like the big headlines that is happening in the media, and then ask yourself, why is the shutdown, for example, in the case of shutdown, why is the shutdown always happen in the US? Is that a real big impact on me or on my business, things like that? So the message, which is stock cards message and this episode's message, is that everything you hear something horrific and very crazy and scary in media, you have to give yourself a pause and ask the context behind it and make sure you're not like overreacting, because that's the intention and business model of media, getting you to overreact. I'm going to close on that, because that's exactly what we do on a stock card as well, help people give themselves a pause, look at the data and facts, and make investment decisions based on facts and information without the chaos of what's going on in social media and media in general.
So what I'm going to do, I'm going to give you the stage, and I want you to explain more about Stock Card. Also, let our viewers know how to find you. So I'm going to give you the stage right now.
Great. So thanks again for having me. And I'm founder and CEO of Stock Card. You can find us on stockcard.io. It's a platform for fundamental stock market investors, and we help them get their research or do their research in an easy to understand and intuitive way, faster and better, without the chaos of the market. And you can use it for free. Go to stockcard.io, and I hope to see you around there. Thank you.
Always a pleasure to have you. You are like a friend of the show. Anytime we have these types of things with the economy, things with business, certain things, I like to bring you on and help me and my audience understand it better, especially as it impacts FinTech. Whether it's a major impact that we're like getting all these news and then we start breaking it down, like, oh, he's not as bad, but also depends on the line of business that you are, because it could be totally horrific for your revenues if you obviously are a FinTech that deals directly with the government, or it may slow down some of your business processes if you have to securitize stuff. But if you're not, might not be as impactful. So I really appreciate your insight on the show. I know we've been talking about this topic, and I just think it's right on time with what happened this week and them putting the temporary stopgap. So I think it's extremely informative. So I really thank you for your time and your insight on it. To our audience, next week in the US is a Thanksgiving holiday. So we will be off Friday. So there will be no Tech Behind FinTech, but you can go to techbehindfintech.com. And if you miss our 12 p.m. live shows, it's a plethora of today was the 151st episode. So a lot of content so you can view next week. But we are off. We will be returning the following week, and that will be December 1st with a live episode, great topics all the way through December. So the end of the year. It's so crazy that we're almost at the end of the year. It's a whole other, it's just like, I feel like it just went boom. I feel like literally like a year ago, we were talking for the first time. I think you were like show 99 or 98. You were in the later 90s, right? And that was your first time on the show. And I was like, oh, wow, I'm about to do this 100th episode. And then now it's like a year later, just flew.
Yes. No, well, congrats on all the consistency and great content. It's excellent to see how you guys are growing and putting good content out.
Definitely appreciate that. And to everyone else, join us 12 p.m. every Friday, 12 p.m. except for next Friday. And thank you for all the DMs, the messages. Really appreciate the likes, the comments, and so forth. I will catch you back on the Tech Behind FinTech on December 1st. So all have a great and phenomenal weekend. If you're in the U.S., enjoy your holiday. And on that note, we will be out. Let me just get some housekeeping stuff done. Yes, on that note, we are out. Boy, take care and enjoy your holiday.
Yes, you too. Bye.
Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.